Two does not change.
But I'm going to keep an eye on some pre-positioning on the IT pack.
67 points on the Nifty, 195 on the Sensex.
So the order book for Q2 looks very healthy, and it's also the festive season, ahead of the festive season.
We always had adequate CRAR, the capital ratio, which helped us to achieve the credit growth.
Silver actually is outperforming gold when you look at the last 1 month or YTD numbers as well.
There is some uptick that we are seeing. Nifty is up 61 points right now. Infosys will be the only one in the large cap IT space with a positive growth. Well, good gains in the markets is what we are seeing right now. Nifty very close to the 25,200 mark. Well, that was the day so far. Things are picking up. We're coming to you live from the CNBC-TV18 Motilal Oswal studio. I'm Reema Tendulkar. With me, Surbhi Upadhyay and Nigel D'Souza. And you're watching Closing Bell. And at the day's high now, it's a good 130-point gain on the Nifty, up 0.5%. Midcaps are flat, but again, there is that little bit of a recovery.
Well, that's right. And results keep coming in, right? The last one that came out is Westlife. Looked a little bit pretty much inline set of numbers, but that stock has moved to the high point of the day. Mahindra Holidays is the other one that's come out of that set of numbers. So select stocks reacting to numbers and reacting favorably as well. Both those two stocks should come up for you currently at the high point of the day. Pretty much in a range. Stock-specific action does continue, but I think we need to get closer to around the 25,250 odd mark, because that's where a lot of calls have been written. If you can get past that mark, then the bulls will feel that they are in control. Remember, tomorrow you have expiry that will play out, so it's going to be an important mark. What's good today actually is both the the heavyweights are doing well. The Nifty Bank is up 400 points. That's managed to defend the 50 DMA. It's crossed the 20 DMA. You like that. And the IT index, everyone's pinning their hopes on Infosys delivering some kind of positive commentary, some kind of positive surprise. As Reema has been telling us, that's going to be the lone one that will be growing, among the large cap names. And there is already an expectation that they'll go ahead and tweak the guidance, which that's on expected lines. But some kind of positive cue is what the markets are searching for. Explains why the tech index is still holding up.
Actually, all the three numbers that come today are expected to be good. Persistent, Coforge and Infosys, right? So if anything is to do well, it's got to be these three, guys batting for the IT bulls.
They say save the best for last. This is pretty much the fag end of IT and Reema's earnings season.
Yeah, and mine is starting.
Get ready. And hopefully, some of these tail enders will actually take things higher. By the way, guys, I have to point out that today what we're seeing this green on the screen, it's got a bit of a global flavor to it as well. Global markets are doing very well. And there is excitement beyond Japan. The Japanese excitement has spilt over pretty much in all global markets, because now Japan is a huge trading partner of the US. Japan gets a deal which is favorable, better sounding than 25%. Now they're at least at 15% tariff. This has given, participants hope, particularly in Europe, because remember, the next in line is this Europe agreement. Mr. Trump said it's coming tomorrow. European stocks, look at the French market, the German market is soaring there. Even European auto stocks are soaring higher, hoping that they can get better, terms of reference. The earlier indicated level for Europe was 30%, which was very high. Markets keeping its hopes alive that it will be a far more measured number, the eventual number that will come in that deal. US futures are higher. US futures are higher about 0.5%. So some of this global goodwill is rubbing off on our screens as well. Well, we've got an action-packed next 1 hour for you. So let's quickly talk about some of the key stocks that we're going to cover on the show today. Sapphire Foods is definitely in focus. KFC, Pizza Hut, Taco Bell, they run all of these brands. And the stock is trading flat. Numbers are not very, very hot. And we'll talk about some of the internals in just a bit. The focus remains on FMCG. We'll talk about Colgate. The management commentary didn't inspire too much confidence, and the stock has sold off today, 4.5% lower. So what's the street view on this one? We talk about it. We then move on to IT. Infosys is the poster boy, and can it really, spur things up, turn things around in terms of sentiment for the IT sector? We'll get you the preview as well as the street positioning on this as we go along. Other Nifty heavyweights that are on the radar today would be Tata Consumer, Dr. Reddy's. Both these companies are reporting today, and we'll get you a heads up on both those numbers, the expectations, in just a bit.
Okay, let's just quickly run our viewers through some of the big movers that we have, at least on the large cap screen right now. We spoke about IT doing well, banks, and even Reliance Industries has bounced back after 2 days of losses. So Reliance Industries is up close to about 0.7%. So that's providing support. Bharti Airtel is moving up. Tata Motors is your top gainer, reversing some of yesterday's losses. Bajaj Finance up and about. In fact, quite a few of the auto names are higher. So Bajaj Auto, Maruti Suzuki also in the green. We spoke about Infosys ahead of the numbers. It's charging ahead with a 1% gain. On the way down, Tata Consumer is struggling. That's the top loser ahead of numbers. Stock down more than 2%. Street is a bit skittish. HUL, BEL, ONGC are some of the drags. But how should you position yourself in the last hour of trade? Mitesh is now joining in with a few closing strategies. Mitesh, we've seen a bit of a pickup, 25,200 now on the index.
Yeah, so I think, I've been maintaining this at 24,900, which we tested a couple of days back, would be the lower end of the range, and we could even go back to 25,300 odd levels, give and take a few points, that being the upper end of the range. I think it's just that volatility within this range, and we're just kind of chopping around. Once we start getting past 25,320, 340 zones, then I think, we can look at a stronger up move. Till then, on the index, while the bias is not negative, it is not overtly positive, but on the stock side, yes, we're trading with some kind of long bias. I have a trading recommendation on Naukri or InfoEdge. Buy here with a stop at about levels of 1445 for targets of around 1520 to begin with. Then maybe eventually we can look at higher levels. And the other one which I like, and it's making a fresh high, it's come off a little bit from the highs, is Mahindra & Mahindra. Buy here with the stop below 3235 for targets of 3310.
Okay, all right. Thanks a lot for that, Mitesh. Shubhal, we'll welcome Prakash Diwan as well on the show, and let's discuss a couple of numbers. First up, Prakash, all eyes are going to be at the IT pack. Rima is going to have a busy evening. But Rima, before we get to discussing about the tech-related names, let's go through the expectations on the big boy, right? First out of the blocks will be Infosys. Tell us, Rima, what do we expect on that one?
Well, Infosys expect growth. A top-line growth of close to about 1.5% on a constant currency basis. What could be driving growth this time is also some of the acquisitions that they had done. There were two acquisitions which, according to analysts, will contribute to the top line. So growth is going to be there. Margins are seen at 20.7% versus 21%, so on the flatter side. But again, the key is going to be the guidance. The current guidance stands at 0 to 3%. But because they did two acquisitions and they announced it last quarter, there will be some upgrade to the full year numbers based on that. So Street is saying 1 to 3% though is a given because of these acquisitions. But the question is, do they have the confidence to up the upper end of the guidance? Unlikely, because things are still uncertain. Maybe perhaps in Q2, once we speak 3 months later, they would have the confidence that, the upper end could be tweaked. Margin guidance is likely to remain the same at 20 to 22%. But the more interesting ones would be Coforge and Persistent, because these two have been growing very well. And again, for Coforge, if that poll comes up, we're working with a 6.5% top-line revenue growth, in constant currency terms. And here it would be driven by the large Sabre deal, plus again some acquisitions contributing to, Coforge. So that's going to be one number to watch. 6.5% for Coforge. For Persistent, it should be a growth about 3.8, 3.9% in constant currency terms. Prakash is now joining in. Prakash, what's the positioning like in IT ahead of numbers?
Difficult question because none of them offer great solace at this point in time. But the only stock that one were to look at if there was to be some allocation made is Infosys. You mentioned Infosys would probably be expecting 0 to 3%, which could be up to 1 to 3%. But there's growth. That's completely missing in all the other big boys. Coforge and all could probably continue to, sparkle. They've done that in the past. But I think for a consistent improvement to happen in the sector, you might have to wait for some more time, maybe another quarter. So this quarter is just gone. There's nothing much to write home about. But if there's some allocation to be made, it could be Infosys, given where it stands, and probably be first off the races once things look up in the US.
Okay. So that's the take on IT. Looking at some of the other movers and shakers of the day, let's see. Credit Access reacting well to numbers, 4% higher. MRPL is surging 7.5%. Remember, earlier in the week, Nigel had told us that people in the market are looking at a tactical, at least a short-term tactical play on some of the refiners. In fact, Nigel, you want to revisit that? I mean, the triggers, because since then, Chennai Petro, MRPL, these stocks have seen a fair amount of trading bounce.
I'll give you a couple of details, just basic details out here. Why the first 2 quarters could look good for both these two companies. First, one, you had that Russia-Ukraine conflict that took place. A lot of global refining capacity got shut down. Then there were some refiners, I believe, that also got hit in the Israel-Iran conflict as well. So global refining capacity itself is short. So because of that, GRMs have seen a bit of a perk up. And GRMs tend to move in line with Brent crude prices. So if you're saying the Brent crude prices as well have seen a bit of a bottom, then this GRMs as well could hold steady. And besides that, since there is lower capacity available, that's why, in fact, you'll continue to see that these GRMs will remain high. Now, besides that, these companies have been focusing on reducing the fuel losses, that is there. So they have been doing some operational efficiencies. Plus, you have the global refineries as well that are in short supply, which will help the GRM stay elevated. And for CPCL in particular, we'll have to watch out for their Q1 numbers because MRPL got hit, owing to the shutdown. CPCL doesn't have that shutdown. Besides that, on the operational front as well, the losses that they have cut down, it used to be around 10.5%. And there's a percentage they give on the annual report.
Fuel and power.
It's fuel, FNL, I think so. So that's come down to around 8.5%. Every percentage point is a few hundred crores to the PBT. So that's why it is a tactical play. Just in the near term, the street could be sensing a refining, opportunity out here, because suddenly you'll look at valuations. Case in point being, if you look at CPCL, their interest cost every year used to be 450 crores. It's come down to 250 crores. And if they're going to make a lot of money, that debt that is there of around 3,500-4,000 crores will come down by half. Which in turn, on a replacement basis, if you look at the recent capacity, HPCL, I think, was setting up a capacity. And if you compare the cost that they're putting up that refinery and you compare it with this, then these are trading at a sharp discount.
And I guess I take your point. These end up being purer in terms of pure play refining, because with HPCL, you have to deal with the baggage of the margins and the marketing margins and what's happening with fuel retailing. Exactly. With a company like Reliance, it's a giant, it's a juggernaut. It has so many other businesses. It's not a pure play on just global refining. Like some of these names, MRPL and CPCL.
MRPL, we should pull up the 7-day chart. Because yesterday also it was up. Monday it was down post numbers.
Reacting to numbers.
Yesterday it bounced back 5% up, and today it's added on another 7.5%.
Yeah.
But I think Mangalam is now joining in. Mangalam, first let's talk about Sapphire.
Well, you guys have been talking about oil and gas, etc. I thought I'd just lighten things up and speak about some of the brilliant, product numbers that have come in. Numbers not necessarily brilliant. So we start with Sapphire Foods. Of course, they are the franchises for Yum in India, along with Devyani. Weak numbers coming in. Revenue growth at just 8%, and EBITDA has actually declined by 9%. Margins have come off as well, and as a result of which the company has reported a loss as against a profit, and this is led by higher other expenses. So the EBITDA margins, as per the company, impacted by higher operating expenses, lower gross margin, and higher mix coming in from the delivery products as well. Key internals not, inspiring much confidence as well. We have Sapphire KFC, where the same-store sales growth has been absolutely flat. KFC same-store transactions, however, have increased, so that's a positive trend I'll be keeping an eye out on. And Pizza Hut same-store sales growth down by about 8%. They've added 11 restaurants, 8 KFCs, 2 Pizza Huts, and 1 Pizza Hut in Sri Lanka. Sri Lanka has been doing well, but that's a smaller part of their overall business. So what is the trigger that we have to watch out for? Two things. One, in the very near term, weakness can come in from the fact that this is the month of Shravan, where a lot of, Indians turn vegetarian. So that is seasonally weak for a brand like KFC. And secondly, a positive trigger perhaps could be any potential development around consolidation with Yum franchisers. There has been this talk always. So whenever or if at all that happens, could be a positive trigger. On the other hand, Westlife Food reports numbers just came in on the exchanges, so they don't have the same store sales growth, but the initial reported numbers are good. Why do I say that? Because one, revenue has grown around 7%, but EBITDA has grown a little more. So we have an 8.5% jump in the EBITDA, margins improving by 20 basis points. That implies that there could be an element of positive same-store sales growth coming in out here. The net profit is, however, lower, but that's largely a non-cash expense, an increase in depreciation. So good for McDonald's, not so much for KFC and Pizza Hut.
That's really interesting, Mangalam, because I remember when I think you were talking about the Jubilant update, the first quarter business update. I mean, Jubilant's been inspiring a lot of confidence as well, right, with those pizzas. But Sapphire is a bit of an exception. Westlife is good. So maybe it's a Sapphire-specific story, not sure. Just hang on, because we want to talk to you about Colgate as well. But let's discuss QSRs with Prakash. Prakash, pizzas, burgers, do you like anything?
Actually, none. But on the stock, I think Jubilant probably stands a far better chance to move beyond this consolidation that they've painfully endured for the last 18 months. And why I'm saying that is because the rationalization that has been undertaken there is something that started showing on the numbers. While Westlife and Burger King and RBA and Sapphire and all will continue to be jostling for that space. That's one. Pizza is one space where Jubilant probably still has a very strong sway, and it'll just kind of the raw material side is much more benign and is expected to do better as the monsoon kind of progresses. So you'll probably start seeing that getting captured in margins. And the moment margins change, you'll probably have a very clear reset for this stock in terms of multiples as well.
Okay. The problem seems to be people are having all these pizzas and burgers and colas and maybe they're not brushing enough. No, they're just being silly. We're moving on to Colgate now because Colgate's numbers have not been that hot and I don't think the management commentary has done much to assuage those concerns either. The stock's been down 4.5%. So far, you can probably classify it as, the not such great FMCG earnings so far in the season. But Manglam, tell us more. What's gone wrong?
Yeah, I'll just tell you about Colgate, but to complete the point on quick service restaurants, if you notice, a couple of years ago, we had this massive burger wave that happened. So Westlife and KFC, along with the sandwiches, the chicken products, were doing extremely well, whereas pizzas weren't doing well on account of a couple of factors. One, people had, stopped eating as many pizzas as they were eating burgers because burgers are snack, pizzas a meal. But now, increasingly, what has happened is Jubilant FoodWorks has, along with Pizza Hut, they've come up with newer options, more pizzas as a snack, lower valued options. So that impacts their gross margins, but increases their volumes. And a lot of the competition on pizzas, the ones that sprung up immediately post-COVID, have now shut. There are reports that said that, over 100 pizza outlets, which were from the unorganized space, which had sprung up post-COVID, as inflation came by, all of them shut. So now pizzas are claiming their share back from the stomach than burgers. So that's why you've seen, pizzas do a little better than burgers after the outperformance that burgers had shown earlier. Having said that, let's talk about Colgate. Weak numbers coming in. Yesterday we had pointed out when the numbers came in as well that, it was a weak set that was expected. The company reported an even weaker than expected numbers, and the stock price is reflecting that. Going into numbers itself, it was down about 38% from the highs, and now it's lower a lot more. The management commentary not inspiring much confidence as well. They are expecting gradual recovery, and that to happen in the second half of this year, which implies the second quarter is not going to be very good for them. There's been weak demand, high competitive intensity, and a high base. Remember, same time last year, the volumes grew by about 8 to 9% as well. So on that base, difficult to grow for a category that is as penetrated but less utilized in a country like India. Brokerages on the back of management commentary have cut their target prices, have cut their outlooks as well. HSBC, for instance, believes that improvement is anticipated, but structural growth potential for this category remains fairly low. The other problem with Colgate is also, it's Colgate Palmolive, and they've been hoping for Palmolive to grow at 2x the pace of toothpaste, and that itself hasn't been happening, or Palmolive hasn't reached critical enough mass to grow the overall business of the company going forward. And then you have, other brokers also writing on it. Goldman Sachs, for instance, they've pared their estimates by about 3 to 4%. The only bull on the stock is Edelweiss, or Nuvama, so to say. They have a buy rating and a target price of close to 3,135 rupees, and they believe that there could be recovery in the second half of this year.
Okay, all right. So there's one bull and perhaps more bears on Colgate. Got that, Manglam. Thanks very much for the comprehensive wrap there. Just going back to Prakash. Prakash, FMCG, the street is really pinning its hopes on some improvement, right? And it's a delta from a 0% growth, even if you do 5%, and if the market positioning is in your favor, then you could play for that, at least a tactical flip, right? Would you be calling out any FMCG stock? Any specific thoughts on Colgate, if at all?
So I think Colgate, it's being punished for not just weak numbers, but absolute lack of, any kind of an enthusiasm to change things. The commentary didn't have anything which builds up hopes and promise. So that's where, this gash of 5% about it. But my sense is FMCG, the real numbers, improvement in numbers would be, and we discussed this about 15 days back, and then there was this whole run on FMCG, more out of sector rotation. I think the numbers will probably only improve post-monsoon. And that also coincide with a timely festive season this time around. And, you'll probably have all the top names start going well, whether it's Marico, Britannia, HUL, Nestle, Dabur. But if you had to take an all-weather kind of an FMCG approach at current valuation, one of the best available options is ITC for various reasons, and we all know the reasons. But it's a matter of getting into a dividend yield stock which continues to throw up cash. Most of its businesses are doing much better than what their peer group is doing. It is on the non-tobacco side. So I think that's the only way to look at this space. Otherwise, give it some time before you allocate money.
Blue Jet, healthcare services, 20% gone, Prakash, in 2 days. I know Street is disappointed with the margins, but 20%, 2 days? Is that too much? Is it a buying opportunity?
Absolutely, Rima. I mean, I think the reaction is overdone. This is what happens when you start, building in expectations which are very unreal. And it may not be unreal from a percentile perspective, but the market has got so used to some of these companies that it's like a Titan not delivering numbers at some point in time. Now we've got used to the ups and downs, but initially when this used to happen, we used to punish the stock. This is an opportunity for long-term players to go. Look at what guidance they've given in terms of capex and the kind of revenue that will come through, the newer areas that are building up. I think the commentary had everything which was positive. If I didn't look at the stock price and just heard the commentary, I would believe it's a great story that I need to allocate some money to. But when you look at the stock and the reaction, you keep wondering what is it that's not gone home well. But I think it's a great opportunity to answer your question in very simple terms.
Prakash, Tilaknagar Industries, what's the view out there? These tier 2, tier 3, not the top of the rug alcohol companies. You normally, I think, Som Distilleries, you've got the timing pretty well on this. Tilaknagar Industries stock has rallied more than 20%, I think, in the last 1 month or so. If you compare it from January's price, where it is flat, but probably there could be a deal on the cards. If yes, what is your view? They have a fundraising later today.
Exactly right. So we'll have to wait. What is it that they plan to do with it in terms of acquisitions and all? But this entire space hasn't done much, probably in sync with the FMCG trend that's existingly playing out. But I keep saying, be with the leader here. Cement space, you are with Ultratech. You haven't gone wrong all these years. Spirits, you remain with United Spirits, you won't go wrong. So, that's the way, and UBL numbers, United Brewery numbers give you that indication that once things start repairing themselves, it's always like a very fast clip at which the change happens. So I really would not worry too much about getting into right now into the second, third rank place. There was an era when you could have bought a Radico Khaitan, you could have argued about some distilleries being promising. But at this point in time, I think United Spirits is the way to go for this particular thing, especially from the long-term perspective.
Got it. Going with the leader, Ultratech. But what about Dalmia Bharat? You have been spot on there, Prakash. Numbers look good, but the street anticipated it. And, we mentioned earlier today that the numbers looked good. Only thing that positive surprise or that zing factor was missing. And even X of JP's volumes, the volume growth is flat, which means that profitability is good, but market share is being lost in all probability. Your view, with the stock down close to 2-3% today, seen some profit taking, good entry opportunity, or it's no longer that 1,1700 mark, you rather stay away for now?
Yeah, I mean, the risk reward is maybe not as promising as it used to be when we started talking about it at that point in time. But they've done a lot of things right, Nigel. To be fair, even the acquisition that they've done, that will take some time for them to be able to focus on volume growth, the right alignment in terms of geography. So, it's happened. Look at how India Cements and Ultratech are behaving. Look at how, some of the other acquisitions have been made in the recent past. So I would give them time. They will not disappoint. It's a great management, knows what they're up to. But yeah, at the levels at which it is, you'd probably be better off wanting to wait for some softer levels to get in. As I said, the risk reward is just not the same, but it still is positive from an absolute return perspective.
Okay. All right, Prakash, we'll leave it on that note then for today. Thank you so much for joining in. Good conversation. And we'll catch up again soon. Well, as we get set to take a break, here's a small programming reminder for our viewers. As the workplace transforms, so must leadership. In the Bengaluru edition of Future Female Forward, Season 3, India's top business leaders gather to reimagine what inclusive leadership looks like and how women are powering the future of work, capital and innovation. Catch all of this live on the 29th of July, 5:30 p.m. onwards, only on CNBC-TV18, CNBC-TV18.com and YouTube. Welcome back. I just want to point out that a lot of auto stocks are revved up in the Indian market action as well, while, of course, auto stocks overall worldwide have been doing really well because of that Japan trade deal, starting with the Japanese giants. It just seems it's a feel-good factor. Tata Motors, you can still argue. I mean, if Europe gets a better favorable deal with the US, perhaps it helps their cause in case as well, or even the China deal for that matter. But for what it's worth, not just Tata Motors, Bajaj Auto, Maruti, a lot of these stocks are on the green side of the screen. Now, that's the large cap space, but there's a lot buzzing beyond the Nifty names as well. And as always, let's go across to Hormaz for a better understanding of all the other action out there. Hormaz, take it away. What's on your radar today?
Oh, plenty of them. And earnings reactions, there are volume-led movers. We spoke about the first name early in the morning, and that was Info Beans. And that stock early in the day was up, but it's now locked in a 20% upper circuit. This is the 7th straight day of gains for the stock. It's up 50% during these 7-day period. It is an earnings reaction as well. And this is on volumes like this. 4 lakh shares have already been traded today. And a 20-day average at this time of the day is just 3,000 shares. So it shows you the kind of volume-led moves that you've seen on this stock. And in fact, it has some significant institutional holding as well. And Mukul Agrawal has stake in the company. Kotak trusteeship has a stake in the company as well. So Info Beans is one mover. The other one is Sky Gold. It came out with numbers just a few hours earlier, and just immediately after the numbers, there were some block deals that were seen in the stock, as a result of which the stock is locked in a 5% lower circuit. Here, 0.5% equity was exchanged. Promoters had sold stake in June as well. And take a look at the returns that the stock has delivered in the last 4 years. Now, before we get to that, of course, 30 lakh shares have been traded here. The 20-day average is 5.6 lakh shares. Now, take a look at the returns that the stock has had in these last 3 years. 2022, 150%, 2023, 365%, 2024, 285%. It actually came into the spotlight last year when the company had announced a 9-for-1 bonus issue of shares, and that's when it had come to the spotlight. So Sky Gold is one of them, a 5% lower circuit. The other one is Ion Exchange, and that is also seeing its biggest single day fall since October of 2023, 10.5% lower on the stock. We've had 23 lakh shares traded here already compared to a 20-day average of just 1 lakh shares. So another volume-led mover on the downside. The stock has broken below its 100-day moving average, and this is the first likely negative year return since 2019 that the stock is supposed to have. Now, the other on the downside as well, from between this 2019 to 2024 period, the stock has gone up almost 1700%, the move in Ion Exchange. Now, the other mover on the list today is Pitti Engineering, and it has snapped a 5-day winning streak and down 7% on very strong volumes here as well. It has seen 9 lakh shares traded compared to a 20-day average of just 23,000 shares. So it's almost a very, very significant move, and it's down almost 30% this year, and this is after the last 5 years the stock has jumped almost 25x. And the last name on this list today is another mover from the broader markets, and that is Datamatics, but this is on the gaining side. This is the 10th day of gains for the stock. It's up at a 52-week high in today's session. The stock has gained almost 30% during these last 10 trading sessions, and today it has seen almost 35 lakh shares traded compared to a 20-day average of just 3 lakh, and this is the best month that the stock has had in 2025. So movers on the downside, movers on the upside as well, but a lot of volume-led movers that we are seeing in the broader markets.
Thank you very much for that interesting list as always. And now the Midcap Index is firmly in the green. When we started the show at 2:30, the Midcap Index was flat. Now it's up 150 points. Aeroflex Industries has started an up move. Sapphire is getting stronger. Ola Electric has a gain of nearly about 8%, so that's popping up. Bellrise Industries is up nearly about 4%. And then you've got names like Bombay Dyeing, which has been strong from the morning, 14% up, very, very large volumes on Bombay Dyeing. You've got Datamatics, Shalby, Green Panel Industries, PNB Gills. These are some of the big stocks with price and volume action today. Alok Agarwal of Alchemy Capital Management is here with us on the show. Alok, thank you very much for joining in. This is Rima here. Globally, there is a lot more optimism today because the sense is that perhaps we're closer to the end when it comes to the entire tariff episode. But back home, the Indian markets have been in a bit of a range, in a bit of a funk. Like, what's your overall view of the global markets, the Indian markets, and where we're headed and where we are right now?
Yeah, hi, Rima. Thanks for having me here. Completely taken that point that the global markets are actually doing much better in the short term. But if we really look at our own markets, after that sharp correction in the months of Jan and Feb, from early March till now, we are up about 20% at the broader index level, Nifty 500. So 4 straight months of decent gains and followed by a consolidation month like July. Actually, it's very difficult to complain out there. And it's all this happening amidst the fact that the macro numbers on growth and liquidity and interest rates and inflation all were improving. So many events like the tariff announcements to the war-like situations between India, Pakistan, and then actual wars like Iran, Israel, all these were happening. Corporate numbers were improving. So after 4 strong months, a consolidation month is quite welcome.
But are we likely to continue to consolidate? Are you sensing a breakout? What's been the read from the earnings season?
So we are quite constructive on the markets. For us, this is just a pause amidst a larger rally. So we remain positive on the markets. The fact remains that despite 2 quarters of slowdown in the previous financial year, corporate earnings still stands at a 17-year high compared to as a percentage of GDP. So the numbers are rising. That was a shallow period wherein the GST collections and some macro numbers started decelerating, but the things seem to be back on track. The negative liquidity in the system early in this calendar year has also been addressed. The various proactive steps taken by the RBI are also yielding fruits now. It's too early in the earnings season so far, but whatever numbers, like around 16% of the companies have reported numbers. And when we see those numbers, they are decent double-digit numbers so far. And it looks like the earnings season is likely to go ahead with that double-digit earnings growth to come up, with slight improvements seen in select sectors. And going forward in the year as well, we remain positive.
Okay. By the way, those are good-looking numbers from SRF. At least year-on-year performance seems to be improving. EBITDA is higher by about 37%. The profit, I think, is higher by more than 70%. And the margin has improved substantially over the last year. But the question is, is the sequential recovery still keeping pace, still looking as strong or not? Because these companies have been coming out, a lot of the specialty chemical companies have been coming out of a long period of a downturn. Above pole, at least. The revenue, you can argue, revenue at 3,800 odd crores is slightly shy of our estimates. But at the EBITDA and the operational front, the company seems to have done well. Stock a little volatile, sold off a bit, then it's recovering. Alok, hi, great to have you on this afternoon. So tell us, when the market continues to be in a range and we know that valuations aren't easy or cheap anywhere. So what is your portfolio looking like right now? And what is getting top billing and what are you avoiding?
Hi, Subhi. The interesting part that we're noticing, especially in the recent quarters, has been that some of the index heavyweight sectors, they are the ones that are not really showing too much of growth, both in the near-term reported numbers as well as the near-term estimates. And the broader sectors which are really showing growth and the visibility and certainty of it, they are not adequately represented in the indices. What I'm referring to is that the heavyweight sectors like oil and gas, FMCG, banking, and IT, they are the ones that are kind of struggling on the growth front, being slightly below the overall corporate earnings growth, almost slightly below the nominal GDP growth as well. But broader area sectors, things like financial markets, capital market services, the real estate, the aviation, the hotels, the hospitals, some of the manufacturing and industrial areas like defense, power plays. So a lot of these areas which are not adequately represented in the key indices, they are the ones that are showing a lot of strength, including the recent ones which are showing turnarounds like chemicals and cement. So these sectors are the ones that are actually dominating the portfolio and also having a larger share in the overall earnings growth that is coming in the markets.
Oh, chemicals, cement, and power, right? These would be your top three?
I would say top three out there would be the capital market plays, the industrials led by defense and power, and the real estate as well.
Okay, all right. Just stay with us. We'll just hop across to Sonal, who's here to quickly dissect those SRF numbers. Sonal?
Well, SRF numbers are largely in line. You can look at the margin number and say, oh, it is higher on a YOY basis. But that is because this time around, the revenue number is lower than what the street was working with. Absolute EBITDA is absolutely in line with what the street was working with. So EBITDA has come in at 831 crore rupees, in line with our poll of 832 crore rupees. Profits as well at 432 crore rupees is in line with 421 crore rupees of poll. Yes, it is higher on a YOY basis, but the stock sold off from the highs because the expectation was of a higher growth. Now, if we look at the segments as well, specialty chemicals was expected to do really strong. 37% revenue growth on a YOY basis was expected from the specialty chemicals division. This time around, it has grown only by 24%. So all hopes were piled onto the specialty chemical space because refrigerant prices had done well. There was front loading of purchases because of US tariff wars. So that is where some disappointment has come by. In terms of the other segments, packaging has grown by 4% on a YOY basis. The expectation was that packaging will grow really well on a lower base. So the revenues were expected to grow by 18% on a YOY basis for the packaging segment itself. In terms of the technical textiles business, it was expected to see a decline in revenues, down 11%. EBIT also has gone down by 45% here. So yes, it is a growth on a YOY basis, but the expectation was of a much higher growth. And that's why maybe the stock came off from the highs of the day. Of course, management commentary very important because usually they talk about how they see the year going forward. So inline set of numbers, specialty chemicals is the segment where we have seen some sort of disappointment that has come by.
Thank you very much for that. That's SRF for you. Get into a break. On the other side, we'll get you a check on what dealing rooms are saying in our segment D Street Chatter. We'll also get you a few BTST calls from our technical expert.
Welcome back to Closing Bell. We are coming to you live from the CNBC-TV18 Motilal Oswal studio. By the way, just keep an eye out on, the pipe makers. You have stocks like Astral. That's suddenly moved to the high point of the day. There seems to be a bit of a positive fillip that's come in there with regard to anti-dumping. So Astral has moved to the high point of the day. You pull up, just take a look at that. Massive move is what we're seeing out there. And the other one is Finolex Industries as well. That one as well has seen a bit of an up move, in the last few minutes. So just keep an eye out on both those two. Big move. I understand that, there's a central bank has accorded permission for extension of time period by 4 months to September 2025 for completing the subject anti-dumping investigation and notifying the final findings. So that's been pushed a little bit. I guess that's why, in fact, these stocks are seeing a bit of a relief rally. Earlier, it was still May, which has been pushed to September. So that's why we're seeing these stocks move up a little bit, particularly in the last 30 minutes. That said, time to move to D-Street Chatter. Nimesh is with us to give us an insight. Nimesh?
Hi, Nigel. After many days, you're seeing a big up move in this fashion in today's market. So the Nifty is up 170 points. And again, it looks like more like a global risk on, which is helping India as well, because there is no specific reason for such a big up move in today's market. Not it's very news or not it's very large FI buying or a DI buying as well. So looks like more of a short covering as well in today's market. But, I was just looking at some data. In the last 50 days, Nigel, the Nifty has been in the range of 5%. That shows that there has been such a large consolidation for the Indian markets in the last 2 months. So looks like a bit of breakout could be on the cards here. From a flow perspective, again, a mixed day, but the number may look large because of the two large block deals today, both Macrotech as well as in Uber Realty. So it has to account for those large blocks as well. The realty index is under pressure today, largely on back of those two block deals, but in general, there is a bit of profit booking as well across all the real estate names in today's market. The breadth, unfortunately, is not that great. So again, a weak day as far as broader markets are concerned, and that's been a bit of a worry in the last couple of days that the breadth has turned a bit negative in the broader market. So a bit of profit booking, you can say, but largely today's move is in the Nifty and looks like it's more of a short covering than large buying from large institutions.
Okay, all right. So more of short covering then. Got that point, Amish. What about stocks? Always action on your list. So what is it today?
Well, a lot of forgotten names are back on my list today. So the first stock is SpiceJet. Big move on that stock and large volumes as well. We saw that news about the Supreme Court order, but there was a large block as well, is what I understand. 3 crore shares got changed hands in SpiceJet. I understand one of the long-only fund, which was one of the QIP investor, they sold out in today's block deal. And one wealth fund was a buyer in today's block. So if there is a disclosure, it could be interesting in SpiceJet. Similarly, is the case with Ola Electric as well. After a long time, seeing a big move on that name as well, up 7%, large volumes as well. I understand there was a clean-out trade from a leading long-only fund. They have been a seller in the last couple of days, but today it looks like it's a clean-out, and hence you're seeing a big reaction in that name as well. So expect very high delivery volumes in Ola Electric today. The third name is Jaiswal Nico. We saw a small block yesterday. The ARC was a seller, and there was an anticipation of further large blocks coming in, and you see the reaction in today's market. The stock is locked at 20% upper circuit, and even there the volumes have been quite large in Jaiswal Nico today. So that's the third name. And the last one is Bharat Dynamics. It's been under pressure in the last couple of weeks. Post there was an initiating report as well from Motilal, I think 10 days back. But for Bharat Dynamics, there is a very strong indication that maybe the company is likely to bag a large order very soon. So that's the buzz in Bharat Dynamics.
Oh, interesting. Okay, got that. And that explains, this big move on Ola. Even I was wondering that, okay, it's probably because of this big block, like Nimesh explained. So thanks for that, Nimesh. Plenty of stocks, as always, catching our attention, 7% on Ola.
Yeah, that's right. I'm just looking at the Jaiswal Nico stock. That's moved to the high point of it. It's one of the fallen angels, right, in the last few years or so. But as Nimesh is saying, there is a large trade that's taken place. On an EV basis, it appears that you put the debt and market cap together, it's around 8,000 crores. Last year, they did close to around 1,000 crores of EBITDA. Now, the street is hoping that they've taken various measures. On the cost side, they've got some captive iron ore as well. So the hope is that the EBITDA number improves from here on. There's an ARC that has 25% in the company. So we'll have to see if there's any kind of supply overhang. No notable name out there. But for the time being, because of that large trade and optimism that there's going to be captive iron ore that will flow through, margins will improve as well. And they've undertaken a shutdown last year and they've upgraded the furnace. So a hope is that profitability improves from here on. So that could be another reason why the street is hopeful. That said, let's go across to Mitesh Thakkar. Mitesh, what do you have for us at around 3 p.m.?
Vedanta is something, which I like as a BTSC call. So take a stop at about 452, look for a target of around 460. And the other one is, UPL, that's been a recommendation earlier as well. But today, after giving a pullback for the first half, it's kind of come back again near the day's high. So BTST here with a stop at about 722 for targets of 738.
Okay. All right, got that. Mitesh, thanks very much for that. So, yeah, those are some of the trades that one can look at as the day closes. The Nifty is actually holding on quite nice and steady. Almost 170 points up on the index, and it's managing to sustain above 25,200 for what it's worth right now. And the Bank Nifty continues to, of course, be in top shape and form. It's actually the financials, not only the Bank Nifty. That's the Bank Nifty. Now look at the Nifty PSU Banking Index or the Private Banking Index or Nifty Financials, which is up on your screen. So all parts of the FSI are firing really well today. It's good day for financials overall. Well, let's go back to earnings then. And apart from Infosys, the other major that we have to watch out for is Dr. Reddy's, which will be declaring numbers later today. Ekta is here with a heads up for us. Ekta, what are we expecting?
Well, for Dr. Reddy's, we're expecting a revenue growth of around 13-odd%. Margins should probably come in at around 25%, which would be a downtake of around 200-300 basis points year on year, and a profit growth of around 6% year on year. Revenue growth to be led by the integration of their acquisition, Nicotinell, the portfolio of nicotine replacement therapy drugs that they had bought last year. So that would be one piece which would really aid in terms of numbers. North America sales are expected to be under pressure, led by price pressure in the cancer drug Revlimid generic, as price pressure starts setting in before it sees more competition come in soon enough. Now, estimates are wide for the North America business, from a decline to a marginal growth. Revlimid generic sales estimate is wide, $140 to $180 million versus $150 million year on year. Expect India to grow around 8 to 10-odd%, aided by the licensing deal for the Sanofi vaccine portfolio and the joint venture with Nestle. Margin range is wide, 23 to 28-odd%. Commentary with regards to semaglutide as well as their biosimilar portfolio in the US will be watched for.
Okay, all right. Thanks a lot for that, Ekta. Well, Tata Consumer as well reports its numbers. Mangalam joins us to run us through what to expect.
Well, for Tata Consumer, it's a double-digit revenue growth that the street is working with, but a large part of that would be led by price hikes, particularly in the beverage portfolio, which is, the tea business, because over the last year or so, tea prices have risen by between 25 to 30%. The company's been sitting on that sort of inventory as well. So notwithstanding any change in tea prices from the highs right now, because of them having old inventory or high price inventory, the margins would reduce. So 11.5% revenue growth is what we're working with. EBITDA actually declines by 7%, which implies a sharp contraction in the margins. The net profit at around 330 crores compares with 290 crores the same time last year. Let's talk about the segments. The most important segment for them, India Foods, grows anywhere between 13 to 15%. This too would be led by price hikes in the salt portfolio, along with increased in value-added products in the salt portfolio itself. And thereafter, you would see, anywhere between 8 to 10% increase in the beverage portfolio, led by price hikes taken in the tea business itself. Finally, we'll watch out for their growth drivers, which is the likes of Sampann, Soulful, as well as Nourishco, and the acquisitions that they made of Ching's and Organic India. Ching's and Organic India likely to do about 350 crores in quarterly run rate before it, moves to about 500 crores in the latter part of this year. For Nourishco, because of unseasonal rains and impacted summer, the growth could be limited to 2 to 3%, but the company's long-term goal for these businesses, growth businesses, is to grow at around 30%.
Okay, all right, got it. Mangalam, thank you very much for that. So that's with respect to the upcoming earnings. Tata Consumer is going to be in focus as well. For the time being, we have to take a break. But as we take that break, listen into a conversation that Prashant earlier had with former RBI Governor Raghuram Rajan on Trump's tariffs and the uncertainty around the August 1 deadline.
The worry is that the growing revenues from tariffs and the fact that so far the labor market in the US has not shown any signs of weakness, growth doesn't seem to be falling off a cliff. All this will convince the administration that this is indeed a good strategy. And since the tariffs are only showing up in goods prices gently, I think they are going to believe that the strategy is working. And as a result, we may see more action on August 1st, levying tariffs across the rest of the world. The key question here is, what about the countries that are in the midst of negotiation? And there, I think it's anybody's guess. Is there a number which is set out for India, which is a statement of intent? Or does India get the same treatment as the rest of the world and go up to whatever numbers envisaged for the rest of the world? Right now, it's 10%. But could it go higher? Yes. I mean, the deal with Vietnam is 20%, around 20% for most goods, which then suggests that that may be the baseline, or the baseline may be a little higher than that. So lots of worries about August 1st.
Welcome back. Last leg of Closing Bell, 7 minutes to go. Mayuresh Joshi, Director Research at MarketSmith India, is now with us on the show. Mayuresh, thanks so much for joining in. Your pick from the earnings season so far, what stands out?
Afternoon, Rima. No, I think quite a few cable and wire companies have posted a decent set of numbers. And yes, we all have heard from a lot of managements that impending competition might be there. However, I think the kind of numbers that have probably come through for a whole host of players, including the KEI management that was on your show in the morning, sounds very encouraging, because as recovery takes place specifically in the second half, my own sense is that the numbers can be even better. Because of the capex needs that will probably happen across the public and private sector. So I think cable and wire companies, I think, have posted a decent set of numbers. Within banks, ICICI Bank, the behemoth, has posted a very decent set of numbers, and that continues to be our top pick as far as the financial space is concerned. And as a disclaimer, we continue holding that stock, both in our local and domestic as global portfolios as well. Let's not forget, I think, a few of the fertilizer companies. I think they might also start posting decent set of numbers. And we hold quite a few of these companies in our local and global portfolios as well. So again, I think BFSI generally decent set of numbers. Cable and wire companies, decent set of numbers.
Mayuresh, on BFSI, let me ask you about tier 2 and tier 3 names, because that's where the market was very excited, right? Because you're hoping they'll grow better and bigger than the big banks and offer a better, if not a big investment opportunity, at least a good near-term trading opportunity. But what have you made of it? I mean, look at Jana Small Finance today. Wherever there's asset quality stress, then market is not touching stocks with a barge pole. Credag, on the other hand, is being rewarded because things seem to be stabilizing over there. I mean, what stood out for you? There's RBL. A lot of tier 2 stocks have come out. AU Small Finance Bank, there was a credit cost issue that showed up. So anything that you like?
So I think afternoon, Survi, I think within the space, again, I think the tier 2 names we keep on, we are holding Karur Vysya Bank as part of our mid-sized bank portfolio. Our take is that the numbers that Karur has probably posted so far, the show should be reasonably good enough for going forward as well. Obviously, I think commercial and corporate banking, which are the two main facets of Karur Vysya Bank, they have held up pretty well. And the expectation largely is that balance sheet growth in both these segments with minimal asset quality damage should probably continue. So this is one stock that we keep on holding in our portfolios. Within the mid-sized banks, outside of the private names, I think Bank of Maharashtra, in my opinion, has posted a decent set of numbers on all counts. When you're talking about deposit growth has been decent, the NIM compression was on expected lines, generally for the system as a whole. And if you probably look at the expectations in terms of asset quality pressures, the provisioning that they've done on their balance sheet seems to be pretty robust. So Karur Vysya Bank, Bank of Maharashtra, I think remain in our global and local portfolios.
All right. What are you making of the metals pack, Mayuresh? You have suddenly that Zing is coming back in. The hope is that pricing has bottomed out, and that's why things should improve. And now Trump's tariffs, well, the street has digested. What do you like from there? You have Vedanta that's moved up in the last few minutes. Nalco has moved up as well. Any take?
Afternoon, Nigel. No, again, I think as a pack, I think we are equal weight as we speak, Nigel, because the expectation is that the recovery might come through in the second half, both in terms of demand and as the demand recovery starts being a little bit more prominent. The prices which are depressed, you're absolutely right. I think they shall start getting they shall pull up as well. And therefore, I think we probably look at realization-led volume growth. That might improve as we head into the second half. At the same time, I think inventory levels across the pack, whether you're talking about ferrous, whether you're talking about aluminium, zinc, copper, are at low levels. So if demand starts coming back slowly and steadily with inventory levels being low, LME pricing might start inching higher. So again, I think Hindalco is something that we continue holding in our global portfolios. One stock that we've kept on our watch list is Neviel Lignite. Our own sense is that the dominance that NBL probably has in the market that it operates out of, the expectations in terms of renewable component for Neviel Lignite is pretty large as well. And therefore, I think operating leverage can start playing out with meaningful expansions that are expected to happen and meaningful growth expected to come back. So Hindalco is something we continue holding. Neviel is something that we've kept on.
Mayuresh, Eternal, 17% up this week, continues to ride higher and higher. Is it a part of your portfolio? 300 rupees now on Eternal. Can someone go ahead and make fresh investments?
So Rima, I think for fresh investments, as we see it at Markets with India, the rating rankings are fabulous. Again, I think the set of numbers that have come through are very, very encouraging. And again, I think in the succeeding few quarters, if they're able to replicate this performance with losses coming off, specifically in the quick commerce business, and the expectation of the target setting that they've probably done, overall, as far as the business component is concerned, if they're able to achieve these milestones every passing quarter, I think a re-rating is definitely warranted. Obviously, valuations and the market cap that Eternal trades at this juncture makes us believe that if there is some element of correction that comes through for whatever reason, I think that might become a better opportunity to enter the stock. But yes, I think with the numbers that have come through, anybody holding should continue.
By the way, look at Infosys and the way it's turned. It was going into the numbers with a fair degree of optimism, and now it's suddenly collapsed from the highs. We've seen it come off nearly 2%, and all that has happened in a matter of 2 minutes. So big fall in
Someone is sniffing a weak one.
Someone is sniffing, a weak set of numbers.
And if they're wrong, that could be a blessing in disguise. Yeah, I'll tell you what, because the expectations weren't very, very great till, maybe 48 hours or so ago. Yeah. Now you're talking about that guidance, etc. And now the stock, if the stock went into its numbers 2.5% higher, then you would say, okay, maybe if...
So some positioning, for tomorrow, perhaps it won't...
unless it's a howler.
Yeah, unless it's a howler. Year to date,
Rima will tell us tomorrow morning.
Year to date, the stock is anyway down close to about 17%.
Yeah.
On a year-to-date basis, so it's underperformed the Nifty. We should pull up the Nifty IT too. The Nifty IT year-to-date is down 14%. Infi is down close to about 17%. But generally, compared to the index, IT, large cap IT has disappointed. But clearly, the market is sniffing
maybe it's just that people don't want to take too much of a bravado position finally in the last minutes of trade.
And just wait.
Just neutralize.
Let the numbers come.
Neutralize your position, let the number come, and then we'll deal with it. Maybe it's just some of that, just some profit taking after a 1% rally, but we'll see.
I think the result of the last 60 minutes was the one that Sonal addressed. SRF zooming away 2.5% higher. The street likes it. It appears there's a bit of a margin beat on that one. That said, let's start SRF. Let's get it up for our viewers. It should come up. Let's take a look at some of the stocks that did do well as we wrap up trade. The Nifty goes home with a gain of around 150 points. Infosys lost its way in the final hour of trade. But otherwise, the markets went home with pretty good gains. Tata Motors led the way up 2.5%.